Hello everyone and welcome to the channel. If you are new here, my wife and I are a middle-income couple working towards financial independence. Our goal is to accumulate a net worth of $1 million by 2026. Today we're going to take an in-depth look at our brokerage account. We started this account in January of 2020 to focus on growth and dividend investing as part of our 10-year retirement plan. This account is a taxable investment account, so there are no tax advantages to having it, unlike our Roth IRAs and our 401ks. However, because there's no tax advantages, there are no withdrawal limitations on taxable accounts, so we can access this money whenever we need it. This is referred to as our bridge to retirement, where income from this account can bridge the gap between early retirement and when we reach retirement age, and we can withdraw from our 401ks penalty-free. So we are making this video because we really haven't given a detailed breakdown of what our investments we hold in this brokerage account. We thought we should give a little more details based on each sector we invest in. And one allows you to build pies that you can set percentages of ownership for your portfolio. So we are going to start with our largest portfolio first, at 23% target rate, our information technology sector. So I'm going to share what tech stocks we are invested in, what percentages, why we chose these companies, what they do, our total dividends for each of these companies, our market gains, and look at the best performing stocks in this category. Tech is a sector that has done very well because of the COVID pandemic and having more people inside. So this is one of our best performing sectors that we invest in. As you can see, the current value of our tech sector is $3,363. Of that, we've invested only $2,500. Most of this is coming from the market gains as the stocks have risen in value. You can see the value over time has risen quite dramatically. And there has been some earned dividends of about $10.39. Within this pie, we invest in 6 companies: Apple, Microsoft, AMD, Visa, Nvidia, and Intuit. So we're going to start with Apple at the top at the target rate of 22%. Apple is an American multinational technology company headquartered in California. They design, develop, and sell consumer electronics, computer software, and online services. Apple is a company everyone has heard of, probably, and they're most known for their iPhones, Macs, and other apps on their App Store. So the current value of Apple in our portfolio is $711. With us investing only $490 into this company, that leaves $224 of gains, which is about an 80% return year to date, which is pretty crazy. Apple also pays a small dividend, and we've earned $3 so far. Apple is the largest company in the world with market cap of $2.0 trillion. A PE ratio of 35, which is not too bad, and a dividend yield of 0.68%. Because of the high value of this stock and relatively low dividend payout, the dividend yield of 0.68% is okay, but we'll take what we can get. And here are the dividends adding up to just over $3. So here are the dividends earned in this account. Apple pays their dividends quarterly, and you can see the dividends paid to us each time has gone up over time. So the reason we chose to invest in Apple is because the company is extremely well known. They invest in a variety of different sectors and are usually the top recommendation for phones, and a lot of people use the App Store to download apps, and it generates a lot of money for the company, and we see Apple sticking around for a very, very long time. Next, we're going to move on to Microsoft at 20% of our portfolio. Microsoft is an American multinational technology company with headquarters in Washington. They develop, manufacture, license, and supports computer software, consumer electronics, personal computers, and related services. Microsoft is well known for its CEO Bill Gates and for its production of the Xbox, Surface computers, and development of Microsoft Office products like Word, Excel, etc. Microsoft is also one of the largest companies in the world with a market cap of $1.6 trillion, a similar PE ratio to Apple of 33.6, and a little bit higher dividend yield of almost 1%. We've invested $572 into Microsoft and a current value of $646, giving us a $78 gain and a return of 25%. We've seen almost $4 in dividends from this company and expect to see more in the future. As you can see, Microsoft pays their dividends quarterly as well, and we've seen a steady increase in the dividends earned in this account as we invest more into the Microsoft stock. So we invested in Microsoft for a similar reason to Apple. Microsoft is a well-known company. They have many products that they offer, and we see them lasting a long time into the future. So we wanted to invest in this company. So we're going to move on to the third highest investment in this category with AMD, or Advanced Micro Devices Incorporated. So AMD is a multinational semiconductor company based in California. They develop computer processors and related technologies for business and consumer markets. AMD is most known for its processors and graphics cards used in computers. Unlike some of the other companies we invest in, AMD does not currently pay a dividend, but the company has seen incredible growth in the few years as they have taken more market share from their main competitor, Intel. We've invested $400 into AMD. The current value is about $606, which is about $200 gain, or 88.44% return, which is the best performing stock in our portfolio. As you can see, the PE ratio is 112, which is much higher, so people are paying a premium for this company, while it has a much smaller market cap of only $101 billion. We chose AMD to invest in because we see this as a strong growth company. They are taking more and more market share from their main competitors, Intel, and their technologies have advanced much faster, and that is why we see them as a very good growth proposition company. Next up is Visa at 15% of our pie. Visa is an American multinational financial services corporation headquartered in California. They facilitate the electronic funds transfers throughout the world, most commonly through the Visa branded credit cards, debit cards, and prepaid cards. Visa has a 50% market share of all card charges in the world and is well known throughout the United States and the rest of the world. We've invested $472 into Visa, and with a current market share of $523, we've seen a modest gain of $53 and a 19.4% return. Visa does pay a dividend. We've earned almost $2, and they have a dividend yield of 0.59%. A market cap of almost $400 billion and a PE ratio of 42. So far in dividends earned from Visa, they've paid 2 quarterly payments to us, and we can see a steady increase. Hopefully this will go up more in the future. The reason we chose to invest in Visa is because of their well-known name and their huge, vast infrastructure for credit card charges. Everyone knows Visa, and we see them sticking around for a long time in the future. Next up in our portfolio is Nvidia at 15% of our tech pie. Nvidia is an American multinational technology company that designs graphics processing units, or GPUs, also known as graphics cards, for the gaming and professional markets, as well as a system of on-chip units for the mobile computing automotive market. Nvidia is also leading in the AI development for many of their graphics cards, and they're well known in the gaming community for their GPUs. I have a Nvidia GPU in my computer currently, and I am familiar with the company. Nvidia is also a top performer for our portfolio. We've invested $476 into this company and seen a $279 increase in the value. Most of our gains have come from the market gains from this company and a small amount of dividends earned. 106% return on investment is very, very good, and we've seen a lot of growth from this company. Nvidia has a higher market cap than one of their competitors, AMD, at $324 billion. A PE ratio of 84, and a very minimal dividend yield of 0.12%. We don't really invest in this company for the dividends. We see it more as a growth opportunity to really drive growth. AMD is what we see as the future, and we see many more years of returns from this company. And finally, at 10% of our information technologies pie is Intuit. Intuit is an American business and financial software company that develops and sells financial, accounting, and tax preparation software and related services for small businesses, accountants, and individuals. Intuit is most known for its tax software TurboTax, its professional tax software Lacert, and financial tracking software Mint. I use their tax software at work, and I've recommended TurboTax to many friends, and we also use Mint for tracking our financials. We are familiar with this company, and that is why we chose to invest in them. Currently, the market value of Intuit for our portfolio is $400. We've only invested $309, which leaves us with about a $94 gain in the market gains, some of those coming from earned dividends, and about a 40.74% return. Intuit has a market cap of $91 billion, PE ratio of 46, and a modest dividend yield of 0.63%. As you can see, Intuit also pays their dividends quarterly, and we've seen a modest increase over time. So as you can see, information technology has done very well for us. It's one of the first sectors we invested in when we opened this account, and we see it as remaining a large part of our portfolio into the future. So here are all the dividend payments we've received from the Tech Pie since we started this account. So since we've started this account and invested in the technology sector, we've seen overall dividend payments of about $8 from all of the companies held in our Tech Pie. Most of our gains have come from the market gains that through our investments. We chose to invest right as the stock market saw a decline in March from the pandemic, and we've seen our average gain of 56% and market gains of almost $840 with investments of only $2,500. We see this as a very good return. So our top earners are Nvidia, AMD, and Apple, and our worst performers are Visa, Microsoft, and Intuit. Overall, I'm pretty happy with the return on all of these companies and our percentage of ownership in each of them. We may consider investing more into Nvidia and AMD as they have great returns, but pay a much lower dividend, so we may consider adjusting that. Overall though, we are very happy with this performance. So that was a look at our tech companies invested in our brokerage account. If you have any advice for us and any tech companies we should look into, please let us know down below in the comments. Also, this was a much more casual video for us, and let us know if you like this style of video so that we can do more portfolio breakdowns and look at other pieces of our investment pie. So remember to subscribe to our channel if you like this video or learn something new. Thank you for watching as always, and we'll see you next time.